Oscar Carboni has a website. It's called livewithoscar.com. I mean, livewithoscar.com, but it is like you're living with him. You can go to this website. He talks about the market. He has some great YouTube content. You can join his channel. He does classes that are great. You can come in to Vegas. They're called OMNI. He's going to talk a little bit about him. If he doesn't talk about him, I'm going to make him talk about him. The food is excellent. The training is education. The training is great. Very, very educational. Very select group of omniacs, as Oscar likes to call them, that are available to kind of do that for you. And Oscar's a great guy. Actually, Greg likes to call Oscar a force of nature. But he does such a great job. He's going to be very, very entertaining for the next little bit. Oscar, I think that's where I'm going to let you take over.
Yes. So, Jeff, thank you very much. And what I would like to say is good morning, good afternoon, good evening. I'm from across the globe. For traders who do not know me, I will give you a brief, very brief presentation on who I am. I don't play salesman, you know what I mean? So I don't expect a big sales pitch at any means from me. But what I will do is show you where you can find me. If you want to hang out with me after the presentation I'm about to show you, if you think it's smart, which I promise you it will be, you may want to come hang out with me. If you want to do that, you can literally just go to livewithoscar.com, where you would find me in a live trading room that I run literally 24 hours a day. It's live right now. I'm waving to you. If, in fact, I wasn't speaking to my audience, the camera facing me would also be in that chat room, and there would be 2 cameras in there. So you can find me at all times. The easiest way to get there is just go to livewithoscar.com. If you're not a member, you will hit register, and here's the beauty of this: no credit cards, no nonsense. You will literally just come up with the username, email address, and get your verification code. Now, the important thing about that is I promise it's going to go to your spam account. Look in your spam folder. You will receive an email from Oscar, from Live with Oscar. Click that, and you can immediately end up here. You click Oscar's chat room, and boom, you would be in here with me live. Now, what I do is I spend my life in this trading room, going through trades, showing charts. We get into trades every day, or if the market sets up, and we're out by the end of each day. I send out those signals via Discord. They go out on an email. I speak the signals. We send them out in a flash update. You couldn't miss the signal if you tried, unless you stuck your head in the sand. So we do that. And then we've got this. Because some of you may not know me, I'm going to show you a very, very brief video, just to show you a little bit about the acrobatic stunts that can be done using technical analysis, using the chart. And from there, we will get into today's presentation. Today's presentation is very interesting. I've had many Omniacs write to me knowing I'm about to do this webinar on Monday, and many of them have written to me from around the world and said, Oscar, please do us a favor. We have a question collectively we'd like for you to answer. Will we continue higher in Nasdaq and E-mini S&P, or will we finally fail? And my job today will be to teach that to you, show you where we're going, why we're going, how we're going to get there, and help you gauge where this market will go in the future. I will keep it simple. I promise you there will be zero complication here. When I offer trading recommendations where we actually buy and sell, that's slightly more complicated than what I'm about to show you. But my job today is to keep it simple and answer the question for my Omniacs around the world: where is this going to go next, Oscar? Should we be short or long? So before we get there, a little bit of power of using technical analysis. This video is going to depict a couple of quick calls that I made. Crude oil was trading $103 a barrel. I got invited on TV, told them it was going to drop to $40 a barrel, and they grabbed the vaudeville hook and hooked me out of there.
Hi, I'm Oscar Carboni. I've been one of Wall Street's leading analysts and traders since 1982. For over 38 years, I've been incredibly accurate with my market calls and market projections.
The sudden drop in oil prices isn't a huge surprise to some. One guest predicted it right here on Money. 2 years ago.
At the rate we're moving, we should have crude oil back down under $40 a barrel by mid-2015.
I don't know about that.
She threw me off the set at that point. They literally vaudeville hooked me and threw me off the set, called me a nut. And then, of course, crude hit my spot. And this happens next.
Look who's right now. Joining me now, Oscar Carboni, president of OMNI Trading Academy. You saw it. You said it was going under 40 by mid-2015. We're pretty darn close. When do you think we go under 40 here?
If you guys
recall, watch this, the power of technical analysis. This is 7/12 of 07. And you are going to hear me give the exact high of the market S&P before the crash begins on 7/12, in fact, the whole year of 2007. In almost every video I offered, the S&P would make new highs, get to a specific price, and then stop, which was the crash of 2008. Watch what I say here.
Well, for months on end, I've been saying the 1577 level has been my target since this year began.
1576 was the exact high before the crash began. Watch what I do next.
I think we can see as low as 668 in the S&P traders. 668. We can go that low.
The low of the crash of 2008-9 was 666. I gave the top and the bottom before it ever happened. How can anybody do that? It's almost impossible, right? What I do just about every night is I do a YouTube video. And in that YouTube video, I will tell you exactly what's going to happen the next day.
Celebrities like
Of course,
Justin
you got to get
Bieber
through
and
this
The Rock
nonsense.
generate hundreds of millions of dollars. It's
In my nightly videos.
Good afternoon, and of course.
Just about every night I do a video like this. I talk for a while, then I show you exactly why I expect the market to do what it's going to do. And then you will find me live in my trading room, taking my traders around the world through everything I said last night, in and out until we're out of the trades. So that's where I spend my life. And that's where you can find me if you would like to. But now let's go look at something much, much cooler than that.
I think what Oscar has done is taken something fairly complex and boiled it down into something that's fairly easy and very executable.
The system was a lot easier than I expected it to be. I'm not very good at being very technical, so I thought, oh no, yeah, it was different, so you had to learn something new. But once you did, you think to yourself, wow, I can't believe that something this simple works.
I was surprised at how simple and easily understandable the approach is, and how to implement it and trade it. And it's once I saw the system and understood it, it was it changed how I think about trading. And it was intuitive in that sense, that it became intuitive and just makes a lot of sense compared to everything else that I'd learned.
So I mentioned that there was a question posed to me. Oscar, where is this going? Is it going to continue, or is Nasdaq finally failing? You know what? That's not the actual question that you need to ask. The bigger question is this. The real question is, how is the landscape shaping up? What would make the market continue higher? You've got inflation, right? Everyone's scared about that. Oh my God, inflation going through the roof. You got the geopolitical, we've got the presidential race. No, none of that is going to affect where the chart is telling us where it's going to go, because it's all built into the chart already. The chart will tell us exactly where it's going to go. So the bigger question is, how is the landscape shaping out? So we are going to call this webinar today, we're going to give it a name. The name is going to be the rubber band effect. Remember that as we go through this webinar, the rubber band effect. What you're looking at right now is the Nasdaq daily bar chart. Looks fantastic, right? It's been going up like gangbusters. What a great market. I love it. Wall Street loves it. Nothing goes straight up. Remember that, OMNIX traders from around the world. Nothing goes straight up, right? As you can see, you get your pullback, rally, pullback, rally, pullback. So you can't expect anything to go straight up, but you have to know what direction you should be heading in for the next few months. This presentation today should explain and show you where we're going to go and why we should get there. The big question, what does the landscape look like? Let's go find out. So Nasdaq and E-mini S&P cannot go alone. Those two have been going up with the transportation average last week going down. That cannot happen. I've been on Wall Street since 1982. I bleed this stuff. I breathe these charts. I promise you that Nasdaq and S&P cannot go up by themselves without the rest of the bigger indices moving up with it. You got to have transportation average moving with it. You've got to have Dow moving with it. You cannot have two going up and the others going down. They don't have to go up at the same time, but they got to stay together. What have we had lately? E-mini S&P going up, Nasdaq going up, its sisters going down. The rubber band effect, it's stretching. So you've got E-mini S&P looking fantastic. You've got Nasdaq looking fantastic. Dow Jones Industrial Average, well, transportation average, that's no good compared to the other two. The transportation average is very important to Nasdaq and S&P. They cannot go up without it. Now, if you look, there's an arrow pointing down, there's red channels pointing down, and you've got transportation average pointing down. When Nasdaq and S&P are pointing up, that cannot continue. The big question is, who will win this tug of war? Let's go find out. Which market will win? Will the transportation average finally kill the S&P and Nasdaq, like we seen back in the dot-com bubble? Or will Nasdaq and S&P take the transportation average and the rest of the markets up with it? Let's go find out. So you've seen the S&P, the Nasdaq, and the transportation average. I'm absolutely against it. Let's go find out what the landscape looks like. Traders, what would make a market continue to go higher? Well, markets are made up of companies that make products, right? If the raw materials for your products are getting cheaper, your stock will go higher because your costs are coming down while you're still selling for the higher price that you used to sell for when your costs were higher. It's simple math. Look at this. This is the Bloomberg Commodity Index, which is the measurement of commodity inflation, deflation, depending upon which way it's going. At the height of our supply chain issues, when prices went skyrocketing on products, we were at 140.55 in what we would call our inflation index. It has plummeted, poof, smash, goodbye, down, all the way down 95.19. Then we had a little bit of a rally inside this green channel, right? But really what happened was all you did was run up a teeny bit and put in what I call a head and shoulders, another channel moving down, and we are once again abating very quickly in our raw materials. And if companies on the stock market are paying less for raw materials, I don't care if they got to pay $3 more for labor because it went up to $20 from $17. If their costs of raw materials are getting cheaper, they're making money hand over fist on their products that they're charging high prices for. So let's continue. So we can see that prices for commodity products, which are the raw materials that you need to make a product that you're going to sell somewhere, have gotten cheaper dramatically since COVID. Why the hell are the prices of the things on the shelves still as high as they were during COVID? Let's go investigate. Okay, what are some of the supplies? Lumber, random length lumber. Look at how cheap this was. This is now compared to where it was. Industrial supplies are getting cheaper. Okay, lumber's getting cheaper, but that's just lumber, Oscar. How's that going to help everything else? Well, it is one of the big commodities that are being used to create product, and it's getting cheaper. What else is getting cheaper out there? Dr. Copper. Beautiful head and shoulders top, left shoulder head, right shoulder has been just spiraling since the middle of this year, or since the third month of this year. It's just been spiraling down, looks even more bearish. So metals are dropping. Copper is used in everything from the cell phone you're probably looking at right now to the computer to your car. It's used in everything, and prices are dropping. Prices are abating. Raw material costs are dropping. There's a theme here, kids. Watch. Let's go to more metals. Gold, the price of gold has been dropping. Nothing goes straight down, but the price of metals are abating. That helps push the stock market higher. Watch. Palladium. What is palladium used in? Trucks, cars, you name it. Palladium's used in the auto industry. Look at how much palladium has dropped. Now, hold on a moment. If I was selling you a truck when I had to charge you a ridiculous price for that truck when palladium was this expensive, and now I'm still charging you the same price for that truck when palladium is this cheap, am I not making extra money? Is that not going to push my stock up? Absolutely it will. Let's keep looking. So, let's see what we're looking at. We need a 5, and that would be wheat. Look at the wheat chart. Wheat, so now we'll go to some foodstuffs. You know, companies that are selling products on the shelves that are in supermarkets. Now, this whole presentation could never fix services like insurance. I don't know how to get the inflation out of that stuff, right? We're not getting inflation out of insurance, and we're not going to get inflation out of what people want to be paid per hour by cheaper commodities. But what we will get is a cheaper product that the company could sell for an elevated price. And that's what's been going on. So now we'll look at something like wheat. And if you ask me, wheat has got the same issue. Down, down, down in price. It's helping every company that needs wheat to sell a product in the supermarket. What else is going down? Let's see, we just did a 5. We'll need a 6. Soybeans. This is not inflationary when soybeans are dropping. When soybeans start on the left top portion of your chart and drop all the way to the right, that's not inflationary, right? That means soybeans are getting cheaper. Soybeans, soybean meal, that is in tires, it's in stuff, it's in foods, it's in products, it's in products all over this planet. Look into it, soybean, soy meal. That's not inflationary. If the price of the raw materials is getting cheaper, you better believe our stock market's going to keep going up with these high prices they're still charging since the COVID days. Let's see what else we got out there. What we just do soybeans, right? So we are on chart A6. Let's go to A7. Corn. Now, corn is in ethanol. Corn is used to feed animals, which means if you are a store that buys anything that turns into food, your prices are getting cheaper because the corn is getting cheaper. The feed for the animals are getting cheaper. The animals themselves are getting cheaper. Your prices are, your costs are dropping, but your prices at sale point are not. Charge up the stock market. It will just continue. This is actually deflationary, not inflationary. And it looks like corn wants to drop even further. And corn's been coming down forever. All right, what else is out there? Even oats is spiraling down. Who cares about oats except for the horses pulling the carts? Even oats is spiraling lower. So beer companies get to make their beer at a cheaper price and still sell it at those COVID, can't get supply issues, can't get my supplies due to COVID supply issue problems, prices on the shelves. We're being robbed here, kids. Everything's getting cheaper. Their prices are not. Makes the stock go through the roof. If you own a 401k on the back end, you're making money on this anyway. Don't sweat it. All right, so what else do we have? Something like sugar. Look at the spiral in sugar. Do you see the theme yet? Shelf prices still remain the same. You guys go shopping, your wives and husbands and everyone else, you yourself complain about the high prices on the shelves, right? Well, raw materials are much cheaper than they used to be. These cats have just kept their prices up, which is what's driving the stock market. Look at the raw materials. If you make a product, it has gotten cheaper for you. So what are we on? 8. Let's go to another one. What else is out there? Cotton. Aren't you wearing cotton right now? Look at the way cotton has just fallen apart. More industrial supplies are cheapening. The raw materials are experiencing deflation. Well, imagine you and I being partners in the store, and we build this bottle. And it used to cost us a penny to build the bottle. COVID happened. It cost us 15 cents to build this bottle. And now we're back to paying a penny to build the bottle. But guess what? During that 15-cent rise, we started charging $1 for that bottle, and we never dropped our prices. But the price of our raw material dropped. Guess how much more money we're making? Guess what happens to our stockholders? They see an increase in our shares. You see where this is going, right, kids? Let's keep moving. So we just did 9. Let's go to 10. One of the very few not cooperating, crude oil. Now, crude's been going up, and I promise you that's not going to help this situation at all. However, crude's almost isolated on its own, about the only thing left not trying to propel the stock market, which means it's going up anyway. So not crude, the stock market. Now, crude can't go to 100 and expect the stock market to keep going up. But, you know, the way all the other indicators are pointing right now, crude can stay here and we can still go up. I would love crude under 77 to make us really skyrocket. It's not where it is now. Crude's actually been going up. Green arrow. Well, the other commodities have had red arrows, right? Green arrow and crude, it's one of the rare ones not helping buoy the stock market. So what else is out there? Back to this. So I just explained to you and then showed you chart after chart how commodities are dropping. The price of raw materials are dropping. The price, the costs for factories to make products have dropped dramatically. Meanwhile, they're selling them for high-level prices. So you've seen the commodities, right? This is an indicator of that happening. Well, let's go look at some more stuff. What else is doing that? What are we on? 11? Let's go to 12. Yes. What would help propel the stock market on top of everything else I just showed you? Interest rates dropping. Now, if you don't know this, traders, the Fed does not have to lower interest rates for interest rates to drop. Banks are in competition with each other. It is a free floating index. When banks see the stocks go up, when banks see bonds go up on futures, they know inherently interest rates are dropping and they get to lower their price because the bank right next door is going to lower theirs. So whether or not Jerome Powell raises or lower rates or the Fed says a word, the 30-year bond market dictates whether or not rates are going up or down. So you've had the 30-year bond market going up for quite some time. What do I mean by that? It was down here in the 12 handle, 112. It's gone all the way up to 120. It's an enormous spike in bonds. And if you ask me, you're looking at a bull flag right here, which we'll make a little thicker for you if we can, real fast. I think we're looking at a bull flag right here. And I think bonds will continue to go higher. And that is another reason to think that the stock market will remain propelled. Because if you've got a bull flag and you've got every other indication that bonds want to go higher, and they do actually go higher, what you'll find is stock market will appreciate. It will lower that. When bonds go up, interest rates go down. There's your possible bull flag. Now, picture this thing right here, a teeter-totter or a seesaw out in the park. You guys are out in the park right now. If you get on the seesaw, if there's a heavy person on one side, the other side goes up. Well, if bonds go up, interest rates go down. They're on the other side of the seesaw. That is an inherent relationship. The Fed does nothing, and that will still happen. So you've got interest rates dropping, which will help propel the stock market higher. What else is out there? We are on 12, right? So there's got to be a 13 chart here somewhere. There we go. Some proof in the pudding. So I just showed you a whole bunch of charts where commodities are going down, meaning the stock companies that are using those commodities to build a product are doing much better than they were when that raw material was expensive. Let's go to foodstuffs. I showed you how much foodstuffs have dropped. All the raw materials for food has dropped. Look at something like Chipotle. Cheap grains, cheap food supplies will continue to propel stocks like this one. How on earth is Chipotle over $3,000 if the price of inflation is so high they can't afford to make the food. It's nonsense. They're charging the same prices they were charging during COVID, with the price of raw materials being nothing compared to those days. And look at stock. In fact, one of the webinars that I did live for this very crowd for Metastock, we were down here, the price of 1402, and I made a 3,000 call. And I said the geometry I taught you in that webinar a couple of months ago tells me CMG goes up to over 3,000. Look what happened. There's our profit target, 3,000. It was hit. Are you telling me that's happening because Chipotle is paying more for raw materials and losing money? Right? They're killing it. All right, so that's food stuff, Oscar. What about the other stuff? Well, let's go find out. On chart 14 is another one. Okay, so how come Dell Computers and almost all other companies that make a product that sell it are doing this? The chart's going up. Because supplies are cheaper, while the high prices of tight supply chain during the COVID supply issues are still being charged on the shelves. This drives and will continue to drive stock prices higher. That is what's going to happen here, kids. That's where we're going for this very reason. And you can see it before your own eyes. This is not reasoning. I didn't read the newspapers and surmise this. I am a pure analyst. I just use charts to tell me what's going to happen, into market analysis. And what I am showing you is absolute proof that they will propel this thing higher over time. Nothing goes straight up, but they are going to propel this stock market higher. If this continues, the stock market will absolutely go higher. So what else is out there to look at? What are we on? Chart 14, there's a few more to go. Now, let's take you to the rubber band effect. This is what this video was about. I've been watching this happen for the last 3-4 weeks. Couldn't wait to do this video for you. So this is the green bars represent the Nasdaq, the NQ future, NQ, actually U24. Let's change that. That has rolled, so that's a U. All right. And the blue chart represents the Dow Jones Transportation Average. Now, here's where this whole thing is going to sum up for you. The transportation average and the Nasdaq tend to run together, right? If you look, you've got the blue and the green basically together, a little bit apart, but they stay together. In fact, I'm going to use this as a measurement tool. The furthest apart these two have ever been were about here. Let's make that red so it's really noticeable. The furthest apart the transportation average and the Nasdaq have ever been is about here, in between these two lines. Generally, it's even closer than that. They stay with each other. And they stay with each other, and they stay with each other, and they stay with each other, and then look what starts to happen. Look at how this rubber band that used to show us the top and the bottom, look at it stretch. Baboof, baboof. Look at what happened. Now, what you're looking at is the rubber band had gotten so big, it went from here to here. This is the rubber band just 3 days ago. That's how far out it finally stretched. Okay? Now, that rubber band has come in to this. This is all it is right now. This was the rubber band. Look at how it's getting better. So what's happening is, instead of the transportation average dragging Nasdaq down, it's heading back up. The Nasdaq's heading towards it. It's going to give it nothing but power to push the Nasdaq higher. This is exactly what we wanted to see. And here's an interesting tidbit. Look at what's happening today. You have transportation average up 176, Nasdaq down 157. It's exactly what we would like to see. It's exactly what this webinar was built for over the weekend. It's what will tell us what happens. This happening right now, this rubber band going from this big to only this big, and eventually will get smaller again, like it used to be, will propel the markets higher. So that would be this. That should help continue to allow Nasdaq to be a raging bull. Nothing goes straight up. Right now, it's in a phase where it's catching up with or pulling the rubber band in. It's stretched so far, it's now pulling back. It's in that phase. that doesn't mean it's not going to continue going up. It will go up. Everything I just showed you tells us basically it has to go back up. So doesn't mean tomorrow. This is for the next few weeks out. I'm showing you this webinar is for the next few weeks out. So what else do we have? If that was looking good, that should make this look good. Everything I just showed you should continue to propel after we have this little catch up of the rubber band pulling back in. Everything I've just showed you should show us that we will move higher this year. Add to the fact that if you look at the Super Traders Almanac, or if you've been alive as long as I have watching markets, you recognize that almost never do we have a down year in the markets during the presidential election year. Add that to the stew. What else is out there? What are we on? 16. So what you have right now, S&P going up, Nasdaq going up, and well, overall, right? Maybe not today, but overall. And look, the Dow Industrials have gained some legs, started here, bounced again, gained more legs here, 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 and now it's looking to gain way more legs. In fact, it's had a nice strong up day. You could add another bar in today. It's up here. So what's happening is it's not a raging bull like Nasdaq and S&P, but it's starting to catch up, and that's just what we wanted to see. Now that's a green bar, not a red bar. It doesn't represent a down day. This has been an up day all day today, by the way. So today's bar, which is not added in yet, I've done analysis up until Friday's close. So we will populate today's bar with a green fake bar just to show you what's going on out there right now. That will populate itself at the end of the day on the close. So you've got Dow Jones catching up. What else is doing that? We are on 17. The Dow Jones Transportation Average is catching up. This is the one that we needed to go. Why do I say that? Look right here. It's been going up like gangbusters. Up, 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 while you've got the Nasdaq tipping its hat just a little bit to come down and take away that way too far stretch of the rubber band. So it's happening right now. And when these guys get a little closer, they could explode again, once again, together. All right. So I hope I'm answering that question for you cats out there around the world that asked me. So what are we on? 18. Let's see what else is out there. Back to the rubber band effect. Now that you've seen all of that, you do see what's happening here, right? When these two get a little closer, we're set for more rally. That's what this stage is setting for, more rally. The rubber band has finally abated. It's getting back to normal. It's still overstretched, but it's getting back to normal, meaning we're going to continue higher. Let's see what else we have for you. So now that you've looked at all of that, let's go to the weeklies. And does anything on this chart look bearish to you at all whatsoever? Anything here would make you say to yourself, I think it's going to go down. I don't see anything like that. Do you? Now, this is a weekly chart, not a daily. So every one of these bars represents a full 5 days worth of trading. This is a solid, steady, nothing goes straight up, but continuing to rally type of market. Looks fantastic. So it could pull back maybe, but looks great. And let's see what the S&P looks like, because that's got to be here as well, right? Yep, the S&P weekly. Another one. I don't see anything about this market that wouldn't want me to tell you it is a raging bull. So as long as the rubber band continues to contract, NASDAQ and ES will be free to continue to run. What else do we have out there? Now, I showed you, you know what? We talked about raw materials getting cheaper, meaning the price of stocks are going up because they're still charging those high prices on the shelves in supermarkets for those products that are now cheaper to create. There's this talk, oh, Oscar, they made the wage go up to $20. So if you were paying $17.50 for people and now you're paying $20, that That doesn't even get close to how much money you've saved on raw materials. You know what I'm saying? That is total BS when they tell you, oh, the price of labor went up $3. We can't afford. You know, the crude industry used to make a lot of money when crude was $42. And then one day it went up to $80, $90 for the first time in its life. And you know what the crude industry said with that by the end of that year? We can't make any money unless it's at $80. Oh, really? Oh, really? So in other words, last year, you made a ton of money at $42. Are you telling me the costs went up so skyrocketing high that you can't make money now under $80? So it's the same thing that the foodstuff companies do. They could make a lot of money with less priced products right now, but they're making money hand over fist, and it's driving the stocks much higher. So that's a lot of what's going on out there, kids. That is a very simple explanation of what's happening. Now we're going to add something to it. You've got the raw materials getting cheaper. Business in this country is going nuts. You've got metals dropping, interest rates dropping, and what else is going on out there? Don't forget this. A couple of months back, I did something and I told you we are not going to go down for a long time. Do you know why? Because welcome to the AI revolution. Does anyone remember the webinar? I showed you about 15 alternative charts, alternative markets to NVIDIA because it was an $800, $1,000 stock and we couldn't afford that. So we were looking for alternatives. Granted, it did a 10-to-1 split. Now it's $127. But look at the chart. This isn't going to stop. Now, let me explain something. I lived through all of these. When I started, I drew point and figure charts with pencil on graph paper. Computers didn't exist on the trading floors. There were mainframe IBM computers in air-conditioned rooms, nothing on your desktop when I started in this business. When computers finally hit the scene and became public, the stock market went from almost 6 to 7, about 6.5 years, almost straight up. Nothing goes straight up, little pullbacks, almost straight up for 6 years before finally all that power of new computers was finally in the market and we had a pullback. Does anybody remember when the internet came out in March of 94? We went almost exclusively straight up until 2000, 2001 with the dot-com bubble. Almost 7 straight years. The AI revolution, which I explained to everybody in the beginning of this year in a long live webinar, AI is only in year 2, kids. This is just a baby. This push is going to push our markets for 5 more years. It is enormous. It's equally as big as when the internet itself came out. It will just go on for a few more years. So if you want to add that, plus if you think it's just NVIDIA, and nothing goes straight up, of course, it's not just NVIDIA. It's all those stocks I showed you in that AI webinar I did for you a few months back. I pulled a random one out of my list of 15 and look at how high it's gone since I showed it to you guys, which was down here. It's gone up dramatically. It's just another AI alternative if you can't afford the high-flying AI stocks. But that is what's going on out there, kids. That is what's happening. You've got AI pushing us higher. You've got the cost of raw materials going lower, pushing us higher. You've got the high price of goods on the shelf that haven't been lowered, pushing us higher. And guess what will happen if they lower their prices? Let's say they go into a price war and Ronzoni starts fighting with, I don't know, whatever the hell other companies out there. And they start doing a price war. Well, they'll still make a lot of money. You know why? They'll end up selling even more product in the beginning than they were at the high prices, and their stock will still go up. This is honeymoon time, kids. We just need one thing to change. Now, that is about the only thing that I've noticed that is actually giving us some trouble, and we'll go back to it in just a moment. This is a problem. It is the only problem left that I can find technically, however, so we can still move higher. If you can get crude to do this, the stock market will simply explode. The last thing Powell needs to do is lower rates. We all have short-term memories. If you guys look back at videos exactly to the day, January 1st, 2 years ago, I started to do videos about this. We're in this big booming bull market. It's over. We were literally at the high of the booming bull market the day I started those videos. It's over. Why, Oscar? Because they're going to start raising rates. Because we've got a runaway train. The stock market is this runaway train. It will not stop. It's going so fast right now that the wheels, you can see friction red coming off the wheels and it's going so fast. So the Fed came in 2 years ago and put the brakes on by raising interest rates. It slowed the market down. Now we're back at all-time new highs. What do you think is going to happen if they lower rates? You know what I mean? It's just going to go through the roof. The Fed can't lower rates at this point, even though maybe it could help. We don't need the help. Look at what I just showed you. So could it get a little cheaper for you to buy a house? Yes, but guess what? Anybody who wasn't born in 2000 and became of age in 2020 to 24 would recognize that the United States has ran on 5 to 8% interest rates its entire life, forever. 240, 230 out of 250 years, we've always had rates there. Then COVID hit, rates went down to almost zero. Now rates are higher, but the people that were born in 2000, you know, in 2024, they're looking at this going, what are these high rates? We can't live like this. Well, you know what? Yes, you can. This country thrived dramatically its whole existence with rates up here. So you don't really need to lower rates to keep this thing moving. Lowering rates will blast it off, but you don't need to lower rates to keep this thing moving. Is there anything else that we should have in this list? So I think of all the stuff I wanted to actually present to you to give you my case why this thing will continue to go higher, I have just shown you those charts. I've presented my case to you. That is what's coming next. You've got the AI revolution pushing this whole thing. You've got the raw materials dropping, helping dramatically. They're still charging more higher prices on the shelves that they had to charge when their raw materials were more expensive, but now they're cheaper. This all amounts to higher. Add to that my year-end calls are higher than we are now. This is going higher, kids. Nothing goes straight up. That is my thesis for today. That is what I wanted to present to you. I am finished with my presentation today. Jeff, don't know what you want to do at the time, but that is what I wanted to show. Now, if you guys if you thought that was cool, if you want to learn more, just come down to livewithoscar.com, as I mentioned, and come to my free trading room. In fact, it's probably this window. Come to my free trading room, hang out with me. No credit cards would be required to get you in there, and I can help you in 1,000 ways. Just come join me at livewithoscar.com. And if you're really serious about trading and you want to come out to my 4-day seminar, that will start in 23 days. It's right around the 25th of July. You would get into Vegas on a Thursday night. You're going to work with me all day Friday into the evening, all day Saturday, all day Sunday, all day Monday. By Sunday night, you are going to be calling Monday's trades for me in real time. You will get them right. If you don't get them right, I'll kidnap you and keep you till Tuesday because no one leaves Vegas without getting it right. If you want to join my camp, I will also send you home with a brand new laptop pre-programmed by me. So everything we study for 4 days together is in that laptop. And then when you go home, we have continued education from OmniCamp because I've got a second trading room, which most of you guys don't even know about. That's called the Alumni Trading Room. And when we want to go in there to answer questions or speak about the inner workings of the Omni that I would have taught you out here in Vegas, we go into this room where nobody gathers but us. We keep it quiet. We go in there and we continue to educate you. So it's continued education for as long as you would like to do this. And if you want to fill out an application and have me call you back on the telephone, just simply go to omnibootcamp.com, click anywhere where it says inquire, and you can automatically start very quickly, a couple of pieces of information, and you can set a time where we will speak on the telephone together. Jeff, with that, I yield back my time to you unless there are some questions I can help you with.
We have some questions, and you can help me with them.
All right.
If that's okay.
Of course.
All right. Let's see. William was hoping you could give an outlook on NVIDIA.
Okay.
NVDA.
I think we just covered that, right? Wasn't NVIDIA here?
Oh, okay.
Yeah, I think we just looked at it, but I'll pull it back up to show it to you. So on our NVIDIA chart, I was using this to express that the AI push is going on for at least 4 to 5 more years. At least it will go on for. because I lived through the computer age, which went for 6 or 7 years. I lived through them when they brought out the internet. In fact, you can look this up on the Wayback Machine. I had the third website on the internet for trading markets, for trading the stock market in 1994. Been on the internet ever since. So I remember what happened with that. And this chart basically showing you that what happened in the 70s and 80s, well, mostly 80s with computers, what happened in 1994 with the internet is happening now with AI. And this is one of the best charts to show that to you on. So yes, that should continue higher. And there's no reason why you wouldn't want to believe in a chart that looks like this, that has the best technology that's ever been invented in the last 50 years and has a pretty decent channel, or at least trend line, telling it that it's probably running into support over the next couple of days. So I would be a buyer of dips in that market for sure.
Cool. Let's see. Did you look at Bitcoin? Silver wanted to say, if you thought Bitcoin is crashing.
Well, here's the thing about Bitcoin. We started to show this a few days back when we were here, and none of these bars existed yet. We were just starting to challenge the average. And what I said to my traders was, let's take a look at this average. It goes back endlessly working on the market. Endlessly it works. No matter where you look at it, it actually worked really well. So what I explained a few days back is that if we get under that average, it will literally be the first time you did not hold the average. And if that's the case, we get to the bottom of the flag. Now that information was given out when we were here. Look at the bottom of the flag. We're almost there already. So analysis speaks to you. It will tell you what's going to happen next. If you've got good eyes and you don't inject your own brain into your thoughts into what you see, if you call what you see, these charts are just unbelievable. They will always tell you what's going to happen next.
All right. Casey says you're fantastic. I agree.
I can help you. If this has helped you in any way, then I am doing my job. What this presentation was for mostly was to set you up for maybe the whole rest of this year. Nothing goes straight up, but you see what I showed you, right? You got some more upside this year coming.
Carlos wants to know, and I'm going to look for this, but he wants to know when you, well, in order for me to find it, he says, can you give me a copy of the webinar where you gave alternative AI stocks? I remember that webinar. I was there. Do you remember when it was? I think it was February.
Yes. In fact, what I'll do for you is I will go through here, and I probably can't do it at this moment, of course, but it's going to be one of these listed in here in my chain of endless videos that come out every night. So somewhere in this list, when it shows itself, isn't that interesting? That's YouTube, kids, not me. My stuff, my stuff works well. All right. So it's going to be one of these, but absolutely I will be able to find it.
Yeah. Yeah. Let's see. Cody says, do you have any opinions about the US dollar?
So actually, yes. US dollar is part of my presentation. I just skipped over it because I don't want to bore you guys with it. Let me show it to you anyway.
It's never boring when you're doing it, Oscar.
All right. So the US dollar, which I promise is in this list, but there's so many. Come on, you're killing me. Does anyone else see it? I know it's in my list. All right, let's do it the old-fashioned way. I had a bunch of notes on it I wanted to show you, but whatever. We'll just do it this way. So the dollar index, and that's not going to get us there. DXY is dollar index on yours, right? Yeah, sure is.
I think it's dot. Oh, yeah, you found it.
You're right. Sorry, we need the dot on this one. Sorry about that, kids. Every symbol is different when it comes to commodities. It depends on what market you're working on. So let's label this for you very quickly. Dot DXY. All right, so this is what we're looking at. And here's what I've been telling people all along, because some people are actually worried. Let me just pull that label back in first. Some people are actually worried that the dollar moving up is a problem. But I have to say it's actually not. And here's why. Two reasons. Of course, we'll just draw a line because it looks beautiful on the chart. It shows that we're moving higher, right? Which is what we want to see. So first off, it just depicts that we are moving towards the upside. And when dollars are moving up, guess what? Whether you realize it or not, you are not feeling inflation in the United States as much as just about every other country. Because you see how your dollar's going up? It's also going up with prices. So when the dollar goes up like this, we're about the only country in the world during inflation that actually gets a little bit of a padding on our inflation. And the dollar goes up more so in this case because we've got higher interest rates than the rest of the world, and we've got great stocks moving up. And if you are not, by the way, if you are not in the United States, you've got to buy US dollars in order to buy US stocks and bonds. So the reason why this should not scare you is that exact reason. You need to buy US dollars to buy our stocks and bonds. So this going up is actually good as long as it doesn't go up too far. It's a fantastic thing for Americans, for basically maybe for the world. I don't know. Let's just fix that little typo. So, but there is another thing. Let's say you're a company in Europe. Now, you might have noticed I didn't bring the Russell into this picture at all. You know why? Because the Russell is more closely tied to Europe than our other 4 major indices. And you know what? That doesn't tell us the picture of the United States. That tells us the doom and gloom going on in Europe. So I didn't even bother to put the Russell into this because Europe is having a difficult time. Here's what I mean by that. This would be your currency if you were not in the US dollar right now. This is the euro. All right, so let's label that real fast. Crazy symbol, but that's it. All right, so imagine going to the supermarket with this high inflationary prices that they don't need to charge anymore, and your dollar is in this direction. That's not good. The rest of this world is feeling this way more than Americans with US dollars. Not that I don't feel for you guys, I absolutely do. We're not creating this inflation. Well, you know, we kind of are. We're keeping the price of crude high. That's a whole nother story. If we could get the price of crude down, which was my thesis, the end of my thesis is all you need is crude to come down for a total blast off of the stock market. If you could get crude to come down, inflation comes down immediately, but not in every country, because if your currency has been going down, inflation doesn't abate as quickly for you as it does when your currency is going up. But you are blessed if you've got US dollars at this time. And if you are a US factory, boy, are you having a good time right now. European factories, that's why the Russell's going down, and that's why the Euro's going down. They're having a much tougher time. Anything else I can help you with? Any other questions out there, sir?
Cody was hoping to look at live cattle.
Say it again.
Live cattle?
So can you actually get a live cattle chart anymore? I don't even know what the symbol is. It's hard to find.
Well, let's see. I'm trying to...
Let's see, July, August, Q4. Yeah, there you go.
There you go. It might require futures exchanges. We'll find out.
There's your live cattle right there. So live cattle has been, if you look at this, it was really expensive for a while. It's been on nothing but a roller coaster. You see how it's just been a roller coaster. Really no rhyme or reason that I have for this live cattle. I don't really trade it like I used to. I used to trade lean hogs, live hogs. Well, lean before they became lean, they were live hogs. I used to trade pork bellies. I used to trade everything you could think of. But I have to say, in the last 10 years, I don't think I've traded the meat market in 10 years. So, and it's not in vogue anymore. The street doesn't trade it. So here's what I'll tell you about this. If you're not an end user, you don't belong in anything like this. You do not belong in something like live cattle or anything like that. If you're not an end user, stay away from markets like this. It's just not the place for us who are trying to speculate to be. It's always been my opinion of the meat markets. And you know what? I might as well throw it out there at you. I was literally a 19-year-old kid down on the trading floor. and I had a mentor, Dominic Orsiello, and I'm standing behind him. He's in the pit screaming and yelling, and I'm a kid holding the tickets. And he can see I'm looking at the pork bellies board. So I run over and I grab the phone and I buy 5 pork bellies. And it goes straight up. Boom, 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 boom. It goes up where I'm up like $3,000. And I grab the phone and I scream, sell out 5 at the market. And I hang up and I watch and I get my fill back 2 minutes later, limit down. I lost $10,000. And Dominic Orsiello looks right down at me and he goes, hey, kid, don't ever trade anything that screws. You know why? The only thing that's going to get screwed in the end will be you. He was talking about live hogs, live cattle, anything of that nature. He told me that 43 years ago. I think he's still right. So cool. Be careful in those live markets.
William wants to know if you have a favorite Mag 7 stock to buy.
No, not really. I am more in tune to want to buy the index than any single stock. In fact, I'm going to give you a quick dissertation on that. There are people all the time that ask me if I want to buy a single stock. And you know what I tell them? This is what you should be buying over any single stock. Let me show you. If you're going to buy anything at all, buy the S&P. Do you know why? It's 500 of the best companies in the world. And here's what you don't have to do if you think the market's going up and you buy long S&P. You don't have to convince yourself that the company's not going to lose a government contract on a Sunday night and you're going to find out Monday that the single stock company that you bought is tanking. You got to believe that there's no cooking of the books. No one's going to find out that there's some shenanigans going on. You got to believe that the CEO is not going to stop his car on the Verrazano Bridge at 7:30 in the morning and leap off because his wife was cheating on him, so to speak. You know, there's so many scenarios that can happen when you put your money behind a single company. Now, if you trade the S&P 500 of the best companies in the world, and if it was supposed to go up today, or at least 500 of the best companies in our country, if it was supposed to go up today, you could take 3 CEOs, let them hold hands on the Verrazano Bridge, jump off collectively together, and it'll still go up that day if that's what it was meant to do. So I try to talk people out of single stocks all the time, and I tell them, if you are looking to trade the market, if you think the market's going up, trade the S&P, not a single stock. It's much safer. And guess what? It's 24 hours a day, 23 hours a day. You can always get out. If news comes out at 4 in the morning, you can't get out of a single stock. You can get out of your S&P like that. It's a much safer place to play.
All right, I think we have time for one more. NG.
Okay, natural gas. So if you ask me, natural gas belongs at the price of $1. I've been saying this for 5 years. It will get there eventually. Let's go look for it. I believe on this machine, it's probably NG. We're probably trading August, and it's a 2.4, right? Yes, that is. So natural gas, if we go back far enough, used to be up here, right? Look at how far it's come down so far. And if I can draw a trend line on that, just to illustrate, just to get it in there. So look at how far we've come down. That is a wonderful thing. This just, by the way, this just adds to my whole thesis about stuff getting cheap enough where they could make products a lot cheaper now than they used to. But look at that drop in pricing. And looks to me like natural gas will continue eventually to spiral down to $1. Nothing goes straight down, right? As I say every time I talk about a chart, this didn't go straight down, right? It went like this, it went like that, and then it came and went like this, and then all of a sudden you had, whoa, so nothing goes straight down. But this will continue to work its way, if you ask me. This will continue to work its way. Oh, let's redo that, please. We don't want the scale on the left. We want the scale back on the right where it was. Oh, thank you so much. This will continue to work its way to the bottom of this channel. Now, you know, of course, there's geopolitical, and if somehow we end up with a change in our government, one side loves gas, natural gas and crude, the other side doesn't. So imagine what happens here if we get somebody who loves crude and wants to pump out more crude in the White House. this will be dropping dramatically. So I think I've been saying this for 5 years. It's worth $1. We get it for free when we shell. It literally comes out of the ground for free. The only cost is to store it and move it around. And because we don't shell as much, all right, the price isn't plummeting, but let's see what happens if there's a presidential change and whoever happens to be in wants to pump some crude. I think natural gas would get extremely cheap.
All right, and we did find that YouTube and shared it for the last conversation.
Very good. That's got fantastic information on that, by the way. I think you guys will appreciate it if you watch that.
Will you spoil us with one more?
Sure. Silver. Hi-ho, silver. So not only will I spoil you with silver, but I'll show you that I carry a coin in my pocket since I'm a kid, since I started on the exchange. I started in silver and gold, standing in the pit. I've been carrying a Krugerrand and a silver dollar in my pocket since I'm a kid. And you know what I'll tell you about silver? Stay away. Poison a widowmaker. But let's go look at it. Silver's insanity. I've seen more people lose in silver than almost any other market. It's July, September, right? Let's try September. That'll do it. The widowmaker, there she stands. So what I will normally, right off the bat, what I'll say about silver all the time is this. Just keep this in mind. Silver sort of moves in sympathy with gold. It doesn't really make moves on its own. If gold's going down, silver's not going up. It is not happening. There's a lot of silver out there. Look, a lot of silver out there. And check this out. In 1982, I started in the business, right? And my mentor, who I mentioned earlier, Dominic Orsiello, I started in the silver pit. He said, you know, kid, I've never seen silver do anything except for stay at the same price it was when I started 40 years ago. He started in the 40s, right? So I started in 1982. And the price of silver basically was right here when I started, right about here. So it came down from the Hunt Brothers. It went down to $3 or $4 and stayed there for a while. Now, we are in 2024. And you know what I can say? I've been in the business 43 years, and you know where silver is? It's in the same spot. It's in the same spot it's ever been for my entire career. Now, why I'm bringing that up is if you pulled up something like gold, which traded right next to silver in 1982, gold is worth 2,200 and change, right? That's not gold. I don't know what that was. I don't know what that was. It just came up. It wasn't gold market. Let's do that. All right, so it wasn't the August gold. Gold is now worth $2,338. When I started, I'm going to take you there if it'll show us, if it'll go back for it. No, it won't go back. When I started, the price of gold was $265. That was the price of gold. So gold was $265. Now gold's $2,300. But silver is in the same place. Gold was $265. It's worth 10 times what it used to be worth. And silver is in the same place. Let me show you another one. Watch this one. When I started in the business, this is copper. Copper, you know how much it was? Let me draw this out for you. That won't work. It was 65 cents. I kid you not, copper was 65 cents when I started. The price of copper right now is $4.43. You know where silver is? In the same place. So when he told me 43 years ago that silver is a dog and it will never go anywhere, he's been right for my entire career. Because copper right now is $4.43, $4.43. It was 65 cents. Gold was $265. It's $2,300. Silver was $23. It's trading somewhere in the 20s right now. So what I can tell you about silver is when it sticks its ugly head up, let's go back to silver. Once again, an old adage from the trading floor. You guys in the trading room know what's coming. When silver sticks its ugly head up, this is what I've been taught my whole life. Take out your lawnmower and chop it off. That's what I've been taught my whole life when it comes to trading silver. So I will give you that same sage advice that's helped me for my entire career. It's a dog.
All right, last question. How do people find out about your boot camp?
So in order to find out about my boot camp, thank you very much for that. We can literally just go to OMNI BootCamp, which I'm there already, but I'll just show you how simple it is to get there. Just go to omnibootcamp.com and you can just click on anything. Inquire here, start my application, you name it, it just keeps on going. Good testimonials are in there, all kinds of great stuff from people that have come out to see me. So just go to omnibootcamp.com and fill out your application. If you want, watch this video. It's a pretty cool video. It'll explain a lot about what I do and how we do it here. And then, of course, go to livewithoscar.com and you can join me in my trading room, which is where I am always at, where I'm at right now, where I sat through this whole webinar so my Omniacs around the world can still see what's going on. This is free to you. I offer you an olive branch to come on in and see what I can do for you here.
All right, good job. Thanks, Oscar. So I did put those in the chat for everybody, Live with Oscar and the omnibootcamp.com. All right, that's it. Thank you very much.
I thank you guys. Let me just leave the chart up here before I say goodbye. And
sure.
that transportation average coming together with the Nasdaq, it's a beautiful thing for us kids. Be waiting for it. Thank you so much for tuning in. And I will say this to you, what I try to tell my Omniacs at all times, put a stop in before you get into a trade. And if that stop's getting threatened, don't pick up your keyboard and start hitting buttons. Don't do that. Don't change orders. Say this to yourselves over and over again because I know it'll help. Are you with me? Come on, kids, you know what's coming, right? 1, 2, 3. Stops are
in.
Yeah, dig it. Are you ready? Emotions are
out.
Yes, thank you so much. That will help you when you're in a bad trade, I promise. Jeff, Metastock, thank you so much. We love you guys.
Thanks, Oscar. We really appreciate it.
Much appreciated.
Cool.
And I enjoyed myself dramatically.
Let me do this. Okay. We also, let me go ahead and make me the presenter real quick. Let's do this. We did sit down and we actually recorded. We do appreciate all of the work Oscar does. Such a good proponent of Metastock over the years and has been using it. I remember I talked to him way back when I was in the sales team, but we did sit down and we did a training class with him. As you know, he does a lot of trend lines. He looks at a lot of technical formations, and we basically did a master class with him that talks about how to properly drop a chart, how to put trend lines, how to find support and resistance areas. It was about 3 hours of instruction, and we're going to do a special on it because we're going to do a special on everything. So normally the class that we recorded is $499. If you want to subscribe to it, you can get instant access for $350. You can do that by calling us at 800-882-3040, or you can go to metastock.com/saleschat, or you can go to metastock.com/summit promo and get it there too. So there you go. All right, very cool.